Okay, guys, so this is going to be a raw video, unedited. We're going to be discussing liquidity, right? So I want to use the popular pair that most of us trade to explain this. Or let me just use volatility 10. All right, let's use volatility 10. Okay, all right. All right, so now I want to talk about a very important topic. And that is the topic of liquidity, right? So we have to really understand liquidity because, currency markets and synthetic indices are not the same, right? So for the synthetic indices, well, I have to really understand liquidity. I want to really understand liquidity for synthetic indices, right? So this is something that you know, if you're a currency trader, you will understand the concept of Asian highs, New York Open, session liquidity, all those time-based liquidity, right? But when it comes to static indices, right, there's only two kinds of liquidity personally I look at, right? There are only two kinds of liquidity I look at when it comes to static indices. And what are those two kinds of liquidity I look at when it comes to synthetic indices? They're just basically two, right? Very simple. I'm looking at old highs and lows, and I'm also looking at what? What am I looking at? Previous day highs and lows, right? So I'm looking at previous day high and lows, right? So these are the two kinds of liquidity I am looking at when it comes to synthetic. And I can also add this one just for addition to trend lines. All right, this is the third one that I also look at. All right, this is the third one I also look at. So let the three kinds of liquidity I look at. I look at old highs and lows. I'm looking at previous days highs and lows, and I'm looking at some trend lines, right? So now, what is the importance of this? And the importance of this is that the market, right, is engineered, right? The smart money, right, is engineered, or the algorithm of the market is engineered to take liquidity. So as a smart money manager trader, you're looking to buy below lows. I want to sell above highs, right? I will explain. This is what a smart money minded trader is looking to do, right? He wants to buy below lows and sell above highs, right? This is how a smart money minded trader is looking at the market, right? He's looking to take trades. Now, this is how he does it. And then, in terms of profit targets, right? In terms of profit targets, a smart money minded trader is, targeting what old highs and lows for take profits, right? And then also targeting what fair value gaps, right, for his take profits. Right? I will explain that, right? So as a smart money minded trader, right, you're looking to buy below lows and sell above highs, and then your profit target is usually at old highs and old lows. That is basically what you're looking at. I usually, right, you're looking to take your profits at old lows or old highs or fair value gap. That's another place where you want to take your profits, right? So now let us start with the first concept, which is old highs and lows. So what is an old high or low? An old high or low is simply, when the market is trending, whether it's down trending or up trending. For example, the market is trending downwards, right? The market is creating what these old lows, right? So as a smart money minded trader, you're looking to take your profit at this old low. So assume that maybe you saw an order block or something that took your interest here and you want to sell. So you're targeting what? The old low, right? So this is your target, right? This old low, right? Now what it simply means, we're targeting old lows for sale. And now, with respect to selling above highs, we are trying to say that if, for instance, now you're having a kind of, kind of double top, right? A smart money minded trader is not looking to take a trade on this kind of scenario, or let's say triple touch now. A smart money minded trader is not looking to take a straight here because this is what every other retail trader wants to do, right? Every other retail trader wants to take a straight at this triple top, but a smart money minded trader wants to see this high breached and then wants to take a sell above that or after that. So it must not be above, right? So we can say sell after the highs have been taken out, or that's what simply means. So this sell above highs doesn't only mean that you must sell above the high, that it must be above high. You want to sell after price has taken the high. So you can take your sell maybe as it's dropping, right? This is the market sell, you can sell, and obviously you're targeting what this low, right? This low becomes your target, right? Understand? When market takes liquidity out, That's why you want to sell. So your goal as a smart money trader is not to sell before a high is taken. So sell after the high is taken, and then maybe you see some kind of confirmation on the lower time frame, and then you want to take your trade, right? That is basically what a smart money manager is trying to do. So a smart money trader is not looking to sell equal highs or buy double bottoms, right? He's looking to sell after those points are taken out. So now, as a smart money manager trader, you're looking to sell above highs and buy below lows. Right? That is basically the whole concept of smart money trading. And then for your profit targets, you're targeting what old highs and lows. So now, imagine that in this scenario now, the market is trading downwards. I mean, because something like this, and then we create some equal lows here, right? Creating a failure swing, right? Now, as a smart money manager trader, once price goes above this high, let's assume that there's an order block here, right? This is now a trigger to take this trade. We saw this failure swing, market failed to go below this low, creating equal lows, and then this other block was unmitigated. So now you cannot call this an inducement, or this cannot be what an inducement, and then what you take your sell here. Remember, you're selling above what above high, so you look for maybe a confirmation there, and or maybe even if there's no confirmation, price start dropping, and maybe see something, maybe something like a tapping here. I can look for a sell, maybe something around there. Even if it must not be above the high, you can still look for maybe kind of tapping somewhere around there, right? Something like this. You take your sell at this other block, and then you're targeting what this equal lows down here, right? This is just the whole idea. So a smart money trader, once a high is taken, if the smart money trader is bearish, that is a trigger to look for sell opportunities, right? If the market is bearish, not when it is bullish, right? So the market has to give you what a bearish bias, maybe the structure or maybe the liquidity draw. All right. So now that gives you the triggers. Okay, this market might likely go down. Okay, let me look for sell opportunities on this particular market. All right. So now, when the private target taking old highs, old lows, I know targeting fair value gaps, right? Yeah. So then let's quickly talk. Go through some examples here. Right. So now, I think I took a trade. Was it on this? Can't even remember the market again. I took a trade yesterday. I think okay, it was on V75. I remember now. It was on V75. I took that trade. V75. I remember the trade I took yesterday. It was on V75. I want to use it to explain something for you guys. All right. So it was inside this 1 hour fair value gap. So now looking at the higher time frame, you can see that this market was obviously bearish, right? Market was bearish, and I was expecting the market to drop. Right? Why am I saying the market is bearish? Because you can see the swing high, you can see the market has been breaking lows, right? So even here the market failed to break this high. See, the market came, tried to break this high, and then it failed. Whenever price is not able to break a high, it means that that market is currently what bearish, right? So I was okay, market is bearish. And then remember what I told you guys that when the market is bearish, you're targeting what old lows for what your targets. So for me, I was targeting this low as my target. This was my target, this low here. That was my target, this low. And all of that. So the market has actually hit that low. But yesterday, the market had not hit this low. So I went to the 1 hour chart, and then I was looking at the market structure on the 1 hour chart. It was actually on 1 hour I took the trade. It's a very beautiful trade, right? So it was here. I remember now. So trade was here inside this fair value gap here. So I was watching, okay, this was the fair value gap I was looking at. So now I was watching the market here. Market was giving bearish structure, right? This candle took out liquidity, right? Watch this. Remember, I told you it's to sell at both highs. This candle took out liquidity, and then what? It broke to the downside. The same thing happened there. Remember, I told you want to sell at both highs. Market took out liquidity again, and then what? Broke to the downside, right? Another one happened there. Market took out this liquidity and tapped into the imbalance. So this was where I took my trade. I was watching this, and then I was okay. I can see market is giving that same bearish bias. So market took a liquidity, hit this imbalance, and that was where I got my trade. So I simply went to the 5 minutes charts. I went to the 5 minutes chart. That was why I took my trade from 5 minutes chart. Right. So that was it. So the market hit that, so I was like, okay, market might want to sell. Right. So I think I went to the 5 minutes chart, and then I was watching it here, and then I think I got a sell confirmation inside here. So there was actually a 1 minute sell, which I don't want to go into because it's too far a time frame. So it was actually a sell opportunity on the 1 minute chart here. Right. So I took the trade on the 1 minute, and I remember I told you guys that you target old lows for take profit. So I said I told the sell here. I kind of hesitated somewhere around there. I didn't hold the trade so long because it was already evening. Right? I didn't want to hold the trade much, so I just targeted this fair value gap for my TP because fair value gaps can reject price. Remember that price came to this 1 hour. Remember, price came to that 1 hour gap and started rejecting. Can I say it came to that 1 hour gap? So that is the same thing that happens. So if that gap can reject price, That simply means that this gap can also reject price. So I think I saw somewhere here with the 1 minute chart entry on the 1 minute, and then I was targeting this gap. So ideally, I should have targeted this low. This was an old low. Remember, I told you guys old low. So I targeted this old low, and then overall, that's daily high, that daily low. Sorry, let's assume that maybe I held a trade to the daily low. Now, this is a very simple trade idea. Very simple. Okay, this is the old low level. So let's go back to the 5 minute chart. So assuming that I held a trade from that point, the old low. So because I think the two trades somewhere around there. Right, so there's 1 minute. I don't want to go to 1 minute because it wastes my time to start explaining. It will be so far to go back into that. So there's 1 minute. I think they sell inside this that 1 hour fair value gap. I saw confirmation there. Two they sell. Imagine I took the sell and I held for, from here to this recent low would have been 1:3.2. For me, I took my profit at 1:2. Somewhere in this gap here, I took around 1:2. Right, it was 1:2 trade, right? So the 1 minute, so it was not a very tight stop loss. So 1:2 for me. 1:2, that's why I took it. So something like this, something like this. If I held it, I would have been something like maybe 1:4.8. And then if I held for that daily low, this is that daily low, yeah. So this is the daily low. So if I held it for daily low, it would have been 1:2. Let's see. It would have been 1:13. So I don't really like to swing trade because of this. You can see how the market has been, market doesn't really go straight. You can see it has been going up, going down, up, down. So I didn't want to, have to endure this. So this took about how long did this take? From this entry here down to this point, I hit take profit, hit somewhere around there. So this would have taken about how long is this? Let me measure it from here to this point. So this took about 20 hours. So you can see I didn't want to be holding a trade for 20 hours. So I just simply take a trade, this. So I think I should have just gone for this low here. That's what I should have done. Right, I should have just gone for this recent low here. This would have been 1:4. Right, but I was trying to recover a loss. I kind of took a loss on my account, so I was trying to recover the loss. And when I'm trying to recover a loss, I don't like to use too much RR because I don't want the market to reverse on me and then give me further loss. So that when I'm recovering a loss, I like to take profit as soon as possible so that my account can, recover back. And I was able to recover my account with that single trade, right? So that is basically what I do. When I'm in drawdown, I don't like holding trades so much. When I'm in profit, or I can hold very well because my account is very safe, right? So this would have taken me 20 hours, and that was it, right? So let's assume that maybe you did not catch that trade yesterday. You didn't catch this entry now. What would you have done, right? So you have to step back maybe to a time frame higher, because if it's not on the higher time frame, then it's likely not appreciable on the lower time frame. All right. So let's go to maybe 30 minutes chart. I want to see something clear. All right. So that was the dream I took on that V75. And this is my trade journal, right? So you can see this one as well. There was an order block here. Watch this. So we had an order block here. Right. So I had this other block here. Right. And then you can see this inducement. Market took out this high. Remember that you want to sell after a high is taken out. So market took this high, and you should look for a sell inside this other block. So let's assume that maybe you just took 1 hour other block, right? Assuming that you just took a trade without any lower time frame entry, just 30 minutes other block, just took a sell, just entry there, stops above that other block. Now this would have been a 1:2. So remember, you're targeting what this take profit, this low here. That would have been 1:2.62. That would have been a very nice trade too. Remember, you have to know that market is bearish. We are bearish on the daily chart, and then we're looking for only sell opportunities. Note that I'm not trying to catch the buys, right? I'm not looking for retracement buys. I'm not looking for anything that has to do with retracement buy, right? I'm not looking for retracement. I'm only looking for what they sell. So that is how I approach the market from what is logical standpoint, right? So let's see maybe on the 5 minutes, if there was anything of interest, maybe how would have maybe reduced the stop loss? How would we have reduced our stop loss on this trade? Maybe we want to take maybe lower time frame trade, right? I don't think there was an entry here. I don't quite think there was an entry on this at all. Sorry. So there was no re-entry on this. And maybe if you play this, okay, I wouldn't have done that though. Okay, you can see this mitigated. There was a kind of imbalance inside there, right? Look at this imbalance here. So although I wouldn't have taken it because there's it's not very clear. So this is an imbalance here. So you could have maybe played imbalance, but for me, I wouldn't have got this trade, right? I wouldn't have got play this imbalance because I can see kind of trend line. I don't know. There's no reason why I would take a trade there. Would have not likely played the other block on 30 minutes or half of it, like 50% of the other block. That would have been nice. So imagine I maybe took a 50% other block, maybe something around there. I would have seen even been a very big IR for it. You can take 50% of an order block if you want, 50%. But in this scenario, for me, I just like taking my entry at this opening and then targeted for the low just to be safe, right? So that was what the market did. So imagine that maybe you didn't catch it. I think that was an entry here. Right, same thing here. There was a high taken out here. Right, the high was taken out here. And what was the entry? This other block was here. So this other block was here. The high was taken out in this same other block. Maybe the previous stop loss above the high. That would have, when you enter above the high, that would have also been a nice trade for you. If you want to maybe take the sell from this idea, right? Maybe somewhere around there, the stop loss above the high, right? Targeting that same low, right? Notice targeting that same daily low here. And that would have been because of 1 to 4. That is nice. So we have to hold this up and down movement before price finally got there. All right, so trading is all about patience, right? It's all about patience. Patience. You have to be very patient with your trade, right? So the whole summary of what I have said is that when you're bearish, wait for market to take out high, possibly hit a POI or give you that lower time frame confirmation, and then you take your trade, right? So I don't want this video to be so long. That is just basically the whole idea. So this thing I've explained now, just go to use your chart, go to a lower time frame and try to spot these things, right? Try to spot it, try to spot it, try to understand liquidity. Look at this. Letting price took out this high, what happened next? Market said was dumping. So whenever the market is bearish and the market takes out a high, you can start looking out for sell opportunities. Look at it here. Okay, let's assume that maybe you missed this sell. Okay, see this high was taken out. Imagine you missed this sell. What would you have done? All right, see another one here. See another opportunity that came up here on a daily. Can you see this high taken out as well? So this high was also taken out. Remember, I told you guys sell above after high. So if you saw this, that maybe you're going to a lower time frame and look for sales on this as well. So it's just the same thing. It's just the same thing. Just the same repeating thing. I look at another one here. Look at this other idea. Very simple trick. Right, another one, high taken. Market is bearish. High taken. What after the high taken, what happened? Market came towards this other block. Right. Good trade. Another one here. What happened? High taken. After high taken, what happened? We played maybe I think we played this imbalance here, right? Maybe lower time frame would have done justice for you. Right. That is basically how you're able to catch all these beautiful moves, right? So this is basically all I wanted to share with you guys. I would love to see you guys in the next teachings. Please, if you have not subscribed, do want to subscribe. If you want to join my paid mentorship, we are giving you guys lower time frame drills, more of this, deeper, longer classes. Just use the link in the description to join my paid mentorship, right? It goes for a yearly fee of 50,000 naira only, right? So if you want to join us, just use the link, join us, join almost 100 other traders. So we have more, it's more than 100. Imagine being in a group where more than 100 students have taught together. We are discussing charts, we are put some heads together, and notes, we don't give signals. We only discuss the market and then we look for what best to do, right? So hope to see you guys in the future. Cheers and God bless.